there's a new article talking about Micron and explaining why it's a bubble, why this, the stock has exploded recently, how it's inflated like a bubble and is just going to pop and go away. Let's look at the article. We'll also talk about why this could actually be very wrong, and the fact that we're reading this article also shows you why Micron could actually go up further. If you don't mind, hit subscribe so you can see future videos. I have a couple trades open on Micron. So I have 2x futures on Micron. You can see I'm up 74% on this one and something like 50%. Yeah, 54% on this one. So we do have a couple small trades on Micron, but as I've said, I'm heavily investing in the companies buying from Micron. Now, at the time of this recording, the markets are up. Apparently, we just got some news that is coming from Axios that the United States and Iran have reportedly reached a 60-day memorandum of understanding aimed at extending the ceasefire and opening negotiations over Iran's nuclear program. Now, this apparently still has to be approved by Trump, so don't be surprised if this goes away. But this is the news that came out that started pushing up the broader market. It's pushing up Micron as well. Micron up about 5% on the day, it looks like. Well, the futures, I guess, change a little bit. So the timing on futures is different. It's up 1.6% at the time of this recording. Now, this could go away, right? We could actually see a drop in the market. Oftentimes, this has come out from Axios and then been walked back. Keep in mind that this is just a memorandum of understanding aimed at extending the ceasefire, and they still have not negotiated the nuclear program, but it would open up the Strait of Hormuz and require them to remove the mines from the Strait of Hormuz. The U.S. would lift the naval blockade, so this would get oil prices moving lower, and actually we're already seeing oil come down from where it was earlier in the day on this news. So just in general, this would be beneficial. It would be a good thing, but it's not the end of the Iran-U.S. conflict by any means. With that in mind, a lot of people are looking at AI companies. And actually, what's fascinating, this article that I read here explains how we could actually see Micron go down if this Iran-U.S. conflict is over. So let's actually start here. We'll start with this article. They say Micron, the Micron stock bubble, could best be explained partially by two simple numbers. Micron has become a major driver of the S&P 500's projected future earnings growth because of its strong outlook. Goldman Sachs strategists pointed this out. It's only second to AI chipmaker NVIDIA in importance to the index. They say Micron stands to represent 14% of the estimated 2026 earnings per share growth for the S&P 500, which is just behind NVIDIA's 18%. Micron will make up 7% of the S&P 500 expected EPS growth, with NVIDIA at 19%. And this is in 2027. So they're saying basically it's going to slow down a little bit between now and next year. So this is their big point, is that Micron is in a bubble because they're going to have a huge amount of earnings growth, and that's going to contribute to the S&P 500's earnings growth. I don't think those are great points to this being a bubble by any means. Now, they add a little bit more. They say the AI capital expenditures boom sweeping the U.S. has funneled down to SanDisk, Micron, and many others in the chip memory space. As hyperscalers such as Amazon build AI data centers, demand for memory chips has surged. These chips store and move data for AI models, which require large volumes of information to perform at high levels. Memory has become one of the tightest parts of the AI supply chain, allowing the companies to hike prices to boost their profits. The market used this backdrop to send the company beyond $1 trillion market cap for the first time. And it did so in style. The stock exploded 19.3% that day. It's sitting up 184% for the year. Bottom line, full stop. You are witnessing a stock bubble in Micron, and for the most part, and for that matter, most of the plays in the memory stock complex. What ultimately pops the bubble is unknown until it happens, but rest assured it will happen. It won't be pretty. We are cautious on certain parts of the market that have absolutely run away, whether it's memory chips, whether it's semiconductors. This is from Great Hill Capital Chair Thomas Hayes. He said this on Opening Bid. And you'll notice that they've gone parabolic in the last 4 to 8 weeks as inflation expectations have risen as a result of elevated oil prices as a result of the Iran war. If we do get some resolution here in the next coming days or weeks, I think you're going to see a violent rotation out of these stocks, out of the semiconductors, out of the AI plays, out of the Micron and memory plays, and back into the everything trade that we began the year with before the Iran war. Okay, so let's just back this up. They're saying that two numbers that show that we're in a bubble are that the next 2 years, Micron is going to be a big reason for S&P 500 earnings per share growth. Okay, just the fact that it's a much larger company means that it will contribute more to the S&P 500 and the NASDAQ earnings per share growth. Right? Like they're saying that this is a bubble because they're doing great business, because like at the end of the day they're a larger market cap, so they contribute more to these indices. The other side of it is they're just growing very quickly. So they're obviously going to contribute a lot to the earnings per share growth. Right? They're a $1 trillion company, and they're going to increase earnings by 10x. Right? So that, I think, is a really weak point. That's like saying that NVIDIA is obviously in a bubble because they've contributed a lot to earnings per share growth. Well, yeah, it's because they're a fantastic business. Now, what I think is maybe more the point that you should pay attention to is the fact that, this is their margins are quite high, which sometimes leads people to think that they're charging too much or that someone else will try to, compete with them. But at this point, there's just so much demand and not enough supply. So same thing that we saw with NVIDIA a couple of years ago. Their earnings per share growth has spiked. Micron's is spiking. Now, I think there's going to be some competition in the future. If they still are making a lot of money, I think naturally that brings in more competition. But there's been maybe some caution over wanting to, for Amazon or Google or some of these other companies to really spend a lot of money to try to build something like Micron. There's been caution over that because they don't know how long they'll need the memory for, right? Or it's just highly complex. Micron's really good at it. So I think in general, like, if Micron makes a lot of money for a very long time, that will re-rate the business higher, but also that brings in more competition. So the fact that we're seeing articles like this that are like, hey, this is a bubble for sure because their earnings per share is growing way too quickly. I think naturally that shows you that, like, at their next earnings, we could see a major shift where if they report good earnings, they report good guidance, they continue to show, hey, we have more longer term contracts because we have great pricing power, and we see demand going for the next 5 years or 10 years or whatever it is. Wherever they, like, if they give a rosy outlook, it will turn some people that have been bearish on Micron into bulls. And the fact is, if something like Micron continues to go up and continues to contribute a lot to the S&P 500, it makes funds underperform, right? Like, if you're not holding Micron and you don't hold the S&P 500, you're missing out on all of Micron's growth, or the NASDAQ or whatever, right? But active funds don't typically hold something that holds Micron if they don't have Micron itself. It's not like they're going out and buying the S&P 500, right? So this means that they're likely to underperform, right? The S&P 500 will probably beat most hedge funds and active managers this year. And naturally then, if Micron gives a rosy outlook and it starts moving up, people will pile into it. People will pile in because they're offsides, they're underweight Micron, and they'll get crushed. Same thing with people that have been underweight NVIDIA for years, underweight Google the last year or two. Like, you need to show performance because otherwise you get crushed, and then people withdraw their money, and then you make less money. You lose clients, you make less money. So at the end of the day, I think this next earnings report is really important for Micron. Keep in mind, it's right before the end of the quarter too. It's June 24. We have, another week or so in the quarter. So we're going to see probably a lot of funds shift around their Micron position right after earnings. So I would not be surprised to see massive volatility. Some people are thinking we're in a bubble too, because like this is a influencer, Taylor Mathis, that does talks about sports betting and casinos, and doesn't talk about finance. But she said, if you have any extra income, even $5, I would put it in the S&P 500 right now. Things are at an all-time high. Maybe she's joking. I guess I don't know, but it seems pretty serious. I think this is actually really great advice for the most part. Like, you should put $5 in or whatever you can into the S&P 500 because it's a good investment. But the fact that normal people are saying that, that don't talk about finance, and the fact that they're saying this because it's at an all-time high, it's a great time to put money in, like, maybe a little bit of a warning sign. But I think in general, this is good advice, and I wouldn't try to time the S&P 500 too much. When we hit all-time highs, we often hit more all-time highs and more all-time highs and more all-time highs, and then we have a pullback, and then we hit more all-time highs. Now, Micron flipped Berkshire today, or yesterday. They moved above Berkshire's market cap, which is pretty crazy. 1.036 trillion versus 1.035 trillion. Obviously, Berkshire and Micron are very different businesses. Berkshire is very safe railroads and pop companies and stuff like that. At least that's how it's thought of, as extremely safe insurance businesses. Micron supplying memory to AI hyperscalers and 10, 20xing their earnings per share in a couple of years. You can see though that Micron was a $70 billion company in the last year, and yeah, when you have demand like Micron has, it can spike up quickly and overtake these kind of old, these older companies that are really well diversified. Same thing with NVIDIA. NVIDIA is the second largest asset in the world, and 10 years ago it was much smaller than Berkshire, much smaller than Amazon and Google. But what do you know? When you have a great business that plays a key role in where all the big hyperscalers want to spend money, and when you can command giant margins, your market cap's going to go up. Let me know your thoughts on all this underneath the video. I appreciate you all watching. Let me know your thoughts on that bubble theory, if there's anything that actually holds some weight in that argument that they made, or if you think it's all rubbish. Let me know down below in the comments. Also, let me know what you're drinking right now. I had a coffee, but just drinking water right now. I always like looking at what people are drinking. I always ask that on my main channel. So let me know what you're drinking down below in the comments. I'll scroll through. Even if I don't respond, I read a lot of the comments. So let me know. Thank you so much. I'll see y'all. Just a reminder, this is not financial advice. This is not legal advice. Do your own research. I'm never going to reach out to you either in the comment section or through any other means to try to get you to invest in something that I'm investing in or to send me crypto. Some links underneath the video are affiliate links. I may earn a commission, but this is at no extra cost to you. Of course, do your own due diligence.